Welcome to InvestEd Central's Market Minute, sponsored by StockCharts.com. Simply the web's best financial charts.
Hello, everybody. Welcome to December 29th Market Minute. I'm John Hopkins, president of InvestEd Central. Right now, we got the Dow futures up 25, the S&P futures are up 2, and NASDAQ futures are up 3. Asian shares were mostly lower, while European shares were slightly higher overnight, as the rate on the most recent Italian bond auction remained below the market-sensitive level of 7%. Wednesday's market started out with upside potential but quickly headed south and continued to deteriorate throughout the day. Early optimism over a successful Italian bond auction waned as traders realized European banks had quickly deposited billions of dollars of borrowed funds into the ECB, not exactly what officials had in mind as part of the massive lending plan. Today, we're going to get weekly jobless claims, with the market expecting 368,000 initial claims. We'll also get Chicago PMI with an expected reading of 60.1. Finally, we'll get pending home sales with an expected reading of 0.6%. There are no key earnings reports due out today. On the S&P, we've got the 20-day moving average at 1238, the 50-day at 1235, and the 200-day at 1258. We've got support on the S&P at 1238 and resistance at 1275. The market had made a nice move from last week, with the S&P up over 5% in just 5 trading days. That came to a halt yesterday, with the S&P losing 1.25% and officially down for the year. Notice how the yield on the 10-year bond fell back to 1.9% and putting pressure on equities. We're likely going to need yields back over 2% in order for the market to advance further. Yesterday was a mild setback for the bulls. They can easily get back on track here, but need to hold the line at 1238 on the S&P. A close below that level could lead to further selling, while a quick reversal to the upside here could turn the momentum back in favor of the bulls. This is John Hopkins wishing everybody a happy new year, and I'll be back with another Market Minute next week.